definitely a sad moment for us all, as
yes, it
even
is a
though
sad
we're
moment.
seeing, rallies at this time, our former president there. But, it'd be good to, do some kind of throwback, to his
Okay, yeah, I think we have
footprint on the
something on
Nigerian
our
economy.
screen here that let's just reflect a little bit. So just as we are mourning it's called Nigeria is mourning the death of its former president who ruled. That's General Muhammadu Buhari, who ruled the country between May the 29th, 2015 to May the 23rd, 2023. So, but these are some of the key economic highlights that we have here. We call it, you might call it the Buhari's 8-year economic impact, the good, the not so good, and the bad. Now, you talk about the bad first, which is that Nigeria experienced about 2 recessions. That's between 2016 and 2020. And of course, it's not because Buhari caused it. It's because there was a global price crash in oil prices, which was in 2016. But then the country quickly recovered in the first part of 2027. And then not too long after that, the country fell back into recession, which was also short-lived. That's no thanks to the impacts of the COVID-19 pandemic. So that's part of the bad. But in terms of when you look at the good, which we just mentioned, under him, within this 8-year period, when he took office in 2015, the market gained 52%, coming up from 34,310.37. And he left it, that's under the Buharinomics. We're talking about Tinubunomics, or I don't know what name you want to call it, but the Buharinomics, the market, he left office, leaving the all-share index at 52,403 as at May 2023. And within that same period, we saw the market capitalization, that's the total value of stocks listed on the exchange, climbing from 16.9 trillion naira to about 52.2 trillion naira, all in the same level. But the one that is on the minds of Nigerians, which Nigerians are not very happy because of, is the local currency, was that the local currency lost about half of its value on the official window, which was down from 197 naira to the dollar to about 461 naira to the dollar, which is a 57% decline, although the president had always said, well, he was not in support of devaluing the currency, but so far the currency fell by, lost about half of a percent, and of course, we know what the currency is currently trading against the dollar, as well as other major global currencies around the world. Now, in terms of the GDP, which is another factor which is not too good, is that the GDP dropped all the way from $493 billion in May 2015 to, as you can see it here, $363.8 billion as at May 2023. Another not so good about the under his the highlights that we're looking at here is that the country's total public debt it grew from 42 trillion naira in 2015 to 77 trillion naira by sometime around 2023. So those are some of the good and not so good. But let's take a look at the other factors to consider under the Buhari under his 8 years of being the president of the country. He initiated the Social Investment Program, the SIPs, which is one of the key investment things to promote investment in the country. The Petroleum Industry Act, also under the Buhari administration. The Anchor Borrowers Program, which is for the farmers, as well as the Ease of Doing Business, which of course was aimed at improving the country's business environment. So these are actually the goods from what you might describe under the Buhari legacy. So quite a lot will be, he will definitely be missed within the business community as well as the economic community as far as all these are concerned. So these are just a snapshot which we in the business research department are putting out for the former president as we remember him, who's currently has arrived, his body has arrived the country.
Right, yeah, definitely. Quite a sad moment, for the country, and definitely a mixed bag for what we're seeing, definitely. And we are hoping, that the Nigerian economy actually, bounces, back to where we would like it to be, at this point. But we do share our condolences to the family of the former president.
Yeah. Well, but Ladia, well, that's for the president. But the market, as we speak, is in the green, I mentioned earlier. If you can have that on the screen, let's take a look at how the market, the stock market, is performing right now. The all-share index about 1 hour ago was more than half of a percent at intraday trading numbers, 126,863.95. If we see that record rally that we saw on the market as at July the 10th, I believe that should be on Thursday, the market gained about 2% and propelled all the way from 120 to 124, and then ending the week last week in that 126,000 index level. Can you beat that, laddie?
Right, and you did say that was coming, and it happened.
Yeah, exactly.
According
We
to
saw
your
that.
Shining
Exactly.
crystal ball.
From the 120 to the 125, 2 back-to-back projections,
right.
and of course, 3 milestones, all in the month of July.
Wow.
So, laddie, the market, Nigerian stock market, and let's just say it right now, it's official. Nigerian stock market is currently the best performing stock market from the tail end of the first half of 2025 into the first few weeks of the second half of the year, and is still doing quite well.
Right. All in the presence of high inflation, high interest rates,
and macroeconomic challenges,
tension, and tariff wars.
Tariff wars,
this point.
and so many others. I think we'll have our analysts to talk more about the market, because the market definitely this steroids on the market is expected to continue, because at some point we're expecting the first half of the year corporate earnings result, the second quarter result, as well as some other factors. And of course, this number that you just might see, because at some point we were celebrating 40,000, 50,000, 100,000. Right now, even 120 is put in history. I'm looking at a 150,000 index level by the end of the year, and that would make Nigeria's stock market most likely to be #1 best performing stock market for 2025. That's fingers crossed.
Right, we'll keep track of that, definitely.
Okay. All right, so now let's get to talk about other markets. We've dwelt so much on the Nigerian stock market because home is where you have to begin. That's charity, your love for your home. And then, of course, making sure that investments, it's on our own way of saying investors can play into this market. If you don't know where to put your money and make some easy money, this is where you make a stock market, your money from the stock market. But if you choose to go on the cross-border, this is how intraday market numbers are looking for on the Johannesburg Stock Exchange. The all-share index there was down by 0.16% at intraday, 97,064.63. But of course, this market is still going into a positive territory. So far, we've had about other key markets which are best performing. We have the Kenyan stock market, we have the Malawi stock market, as well as the Morocco stock market. But talking about the Kenyan stock market, it's here it closed last week in the red, 0.75%, but has been able to climb all the way from being 90, 100 to about 159.06 as at the close of Friday's trading session, while Egyptian Stock Exchange all-share index at intraday was up by 1.66%, 33,597.35. So that's a snapshot on the markets. Now let's talk about what to expect on the market before we bring in our guest, our analyst for the day. The stock market, what we're expecting tomorrow, first we're expecting that the National Bureau of Statistics is holding a briefing or engagement with some journalists. Actually, last week, the markets, the National Bureau of Statistics was expected to release the country's Q1 rebased GDP, which has been much expected, much anticipated, but we'll be having that discussion. Journalists will be meeting with some officials of the National Bureau of Statistics sometime around 2:30 p.m. local time. So they'll be engaging with the media on the reporting of the rebased Q1 2025 GDP report sometime just a few hours from now. And at the same time, the market is also eyeing the June inflation report due to be released by the National Bureau of Statistics tomorrow. Of course, that also has a way of affecting investment sentiment in the market. At the same time, investors are also positioning, we talked about the stock market, now the first half of the year and the second quarter of this year's, the corporate earnings result, is something that investors are keeping their eyes out. And that's, of course, we've seen one of them being the early bets there. That's Geregu Power has released its unaudited result for the second half of the year, for the second quarter of the year. And then at the same time, talking about the inflation, that's from the world's biggest economy, that's the US, the consumer Price Index report, as well as the Producer Price Index report, will be released on the 15th and the 16th. That's the PPI will be released on the 16th, while the CPI will be released tomorrow, and all eyes are out for how the U.S. economy turns out, particularly within the period where U.S. President Donald Trump's tariff has been kicking in, and what impact it has had on most of the companies within and outside the U.S. Okay, so now let's take a side step and focus on the domestic stock market, as well as the current, the impact of the Buharis legacy on the stock market. And we have Abiodun Adedotun, equity trader with First Securities Brokers, to give us more highlights on this. Thank you for joining us, Abiodun.
Thank you.
Okay, so I know I've done so much of talking, but I'll leave it to you, the trader at the equities market. Now, can you just give us a key highlights? How do you think, what do you think the impact has been on the former president, Muhammadu Buhari? What was his impact, the Buharinomics? How did it impact the market until the last hours of his presidency?
Okay, yeah, first and foremost, condolence to the entire country, Nigeria, on the passing away of former President Muhammadu Buhari. Okay, the market is still up currently, and it's not surprising because the market has been on a roll at least for like a week now, and the most important thing is the direction of interest rates. Now, there's so much liquidity in the system, and of course, investors need to look for where to be able to pay, into the market. And interestingly, the market has also attracted a lot of retail investors in recent times. We've seen quite a number of speculative buying and things like that. So there is so much buzz around the market right now, and of course, wherever there is buzz, that's where the direction of money wants to go. So it's not really impacted the market so far, but the market is still in the green zone.
Okay, so now you talked about the market being in the green zone, and I've seen here that just last week, the market's all-share index was up 4.26% in 5 positive trading sessions, while the equities cap has gained about 3.46 trillion naira, which is approximately, in percentage terms, 4.54%. Now, what could be the major driving force under this? Because earlier today we had that report that the PFAs, as well as some other factors, but what could be the major driving factor? Are investors moving from the fixed income market into the stock market? Can you explain this to us?
Yes, it's more like a trade-off. Investors are willing to take a risk. Everybody knows what inflation is looking like, even though, you understand, there's still a little bit of explaining that we're expecting the NBC to do in terms of the rebasing. Investors want to take a little bit of risk on capital to be able to get the returns, because if interest rate is on the decline right now, and we know that inflation is still persisting on the high levels, you just have to get out of your comfort zone to be able to demand alpha, and that's pretty much what investors have been doing. Now, in terms of the key drivers of the market, is actually been a mixed bag, but we've seen a lot of retail participation. That's why when you look at the price end of price list, you see that there are lots of companies that are gaining, a lot of speculative buying that is happening. Even in the penny stock regime, some which pretty much will be like, oh, we're not expecting a little bit of this, but there's been a lot of aggression. A lot of money is being thrown at stocks currently, especially the mid-sized and the perceived, small companies where retail investors can really, really be able to, influence proceedings. But that notwithstanding, you understand, something major also happened last week. GTCO listed in London, the very first of its kind. It had this GDR on the more like the OTC board area. But, with the listing on the main board, it's more like, okay, a Nigerian company, aside the Seplat and maybe Oando that are listed both in London and Johannesburg, respectively, going to London, especially it's one bank, and saying we want to play in this space. So, it sent a lot of positive signal, I was looking at it earlier. The cross rates for GTCO in London to Nigeria is more expensive in London, maybe around 125, and it's trading at 97 in Nigeria. So whether you like it or not, market tends to converge in terms of pricing, pretty much. So, for a Nigerian company to be able to take this bold step and try to break new barriers, it shows that there is a lot of confidence in what we are doing in some of these companies. And this market, all the market needs is just to continue to run on confidence. And that is here in abundance currently.
Okay, so that takes me to my final question with you. It's earnings season. It's first half of the year. One company has turned out its results for the period of that's the second quarter. So, what are your expectations for the markets as in terms of the corporate earnings, and then what do you expect the market to close Monday's trading session?
Yeah. Of course, the company has always been a front runner in terms of earnings releases, right? And we are not surprised that they've led the way again. You understand, it's becoming a trend. Now, what we expect basically is that Nigeria is a lot cheaper right now on the aggregate level, right? And we expect companies to continue to, you understand, make decent margins of these low pricing, and of course, in nominal terms, you'll be paying a lot of naira to be able to get these goods and services. But in real terms, because of the battering we've had, the currency depreciation and a whole lot that has to do with inflation, we know where things are. So you'd expect companies to continue to do well. You expect the consumer goods to consolidate on the recovery they posted in Q1. All eyes is particularly on, telco giants, NTN, to continue to, dominate the space and get back to full recovery, you understand, of unprecedented losses posted in 2024. You expect the banks to continue to maintain very, very decent numbers. Interest rate just started falling like a few weeks ago. So before the impact really gets into their balance sheets, it's going to take a bit of time. I know one thing, as the saying says, when the interest rate is on the way up, the banks are always very, very quick to adjust your rates, for the lending side. But when it's on the way down, there's a lot of reluctance. So because they want to keep the margins very, very decent. So I expect them to continue to do well at the minimum Q3, if not till the end of the year, because it's already half year already. So you would expect investors to continue to maintain strong posture towards these sectors.
And I myself, I'm very, very keen on the markets. I'm not really an investor. I'm just a journalist, a financial markets journalist. But I'm very, very keen on the market, having a positive close for Monday's trading sessions. Thank you so much for your time on the show. Abiodun Adedotun, equities trader with First Securities Brokers, formerly known as FBN Quest.
Thank you.